Are you new to the market and need some guidance and understanding on basic concepts as a new investor or trader? Well, if this is you, then I got you today. Today, we're doing the top 3 questions of the week as a beginner investor trader. Let's go. Yo, it's your boy Train the Trader. We back. What up, doe? What up, doe? Hope everybody's doing well. We're ending the year strong with some quality questions today. We're going to get into the top 3 questions of the week as a beginner investor trader. Let's go ahead and get into it. Get your pen and paper. Be ready to take some notes. Soak up this game. Let's get it. All right. First question we got. And remember, guys, please like and subscribe. I want to thank everybody that's viewing these videos. If you're learning, if you're getting something from this, please hit that like button, subscribe. I'm just going to continue to create value, just to bring value to you guys. Okay, that's my goal, and that's what I plan to do. So hit that like button, subscribe. Let's get into the first question. First question: what is the best time of day to trade? Now, this is a really simple question to answer, and here's why. I believe the best time to trade is between the open. So we're in Texas here. Shout out to all my people in Texas, Dallas, DF Dub. But the best times to trade is open to 11 a.m., maybe 10:30, but I'm going to push it to 11. So here at 8:30 to 11 a.m., open to 11. Here's why. I've got a chart of Meta pulled up right here, and this is the best way to figure this out. These colored bars down here at the bottom are my volume indicators. So this is the volume for each one of these candles. So it's pretty clear to see open is right here at 8:30, and here's 11 o'clock, 11 a.m. As you can see, the closer we get to 11, what's happening to the volume? It's going down. Most of the time, what you're going to see in these times between 10:30 and 11 and 2 o'clock, because the market closes at 3 here in Central Time, what you're going to see in between 11 and 2, 1:32, is a lot of algos, a lot of computers, a lot of, there's not real big whale money moving in the middle of the day. Most of the volatility happens at the beginning of the day, and that is confirmed by these volume bars. And it's not just this day. As you can see, we can continue to go back, and what you're going to see is a consistent like U shape in the volume. It's going to pick up right here at what we call power hour, which is the last hour of the day. You normally get some closing volume, and then most of your opening volume and volatility is going to happen between open and 11. And it's consistent. It doesn't matter the stock. Now my thing don't want to work. Y'all see how tech be doing me when I'm trying to do a video? Probably going back. Let's go to a different ticker. Google. Let's go to some with some volatility like Nvidia or SPY. But you see it's consistent, guys. See it's consistent. Look at this volume. Early in the day, around 11, slows down, picks up right at power hour. All right. So those are the best times to trade. Open to 11 and the power hour, which is the last hour. There is talks of 24-hour market, especially with that new, stock exchange supposed to be coming to Dallas and opening up. There has been talks this year about a 24-hour market. So be on the lookout for that. All right. Question number 2. How can I tell when a stock is going to drop or go up? Short answer, you can't. I'm sorry to disappoint all, but Here's the thing about the market. There are unlimited probabilities. There is no way of knowing what's going to happen in the market because we don't know all the factors that play into the market every day. Never will. Never going to be able to do that. So don't try. If you picked up on my last video, I talked about the power of the 200 EMA and the 20 EMA. If you haven't seen that, go check that video out. That is crucial for your understanding of the market and the direction. But if you're new, the best things I can tell you to learn are trend lines, which is these orange lines right here. You can draw these on the chart. And I'm going to go to a daily to kind of showcase this on a bigger scale. Trend lines and price action is the best ways to know whether the market is going up. Here's why. We have a trend line that I can place on the direction from this point to this point. Y'all follow me? It's pointing to the upside. Now, these prices become crucial on a horizontal plane like this here. So you can do something like an alert to mark this price at this level. And with that trend line, you can get an idea of whether it's going up or down, or more importantly, when it's breaking a certain price level. Price levels are extremely important when it comes to trading. History doesn't always repeat, but it rhymes, especially with price points in the market. Trend line here is extended. Let me do it this way. We're just going to extend this all the way out as far as we can. Right about there. Keep it going. So this trend line, and why I'm drawing this out like this, is because we can see points of interest where it might have touched that trend line over a long period of time. So the original question being, how do we know when it's going up or down? If it breaks down below this trend line, then we know that it has lost momentum to the upside. Same thing with price points. If we are like it's doing here, it rejected off of this 152.89 and then started working its way down. So we can mark places like this where we see price has touched before, has tested, has failed, and that can help us now with our trades. We can easily see if it's going up or down, and we know we don't need to be buying stocks at all-time highs. That is a huge no-no. If you open up your charts and you see a price is at its highest point, so it's like if this was today right here, sorry, I have to pull this all the way over to the right, but if we see it topped out right here and it now starts to work its way back down, now we can look for entries to enter, but we do not want to buy up here because we'll be buying and then immediately start losing some of our money and be feeling all crappy and stuff and saying that the market is trash and that it's not for me and all this other stuff. No, you just don't understand. You just don't understand yet. Take the emotion out of it and let the charts tell you what they're trying to tell you. Boom. We have a price point right here. It broke that. Came down to this point. Just so happened to be an area where it was tested before. And then it bounced back up. Right? That makes sense. I hope I'm making this clear. This is not too complicated. I'm trying to make this very simple. Right? So it's going up from here, came down. And if it bounces from here, guys, where do you think it's going to go? It's going to go back to where it failed from. And you see it does right here. See that? So we now know once it's bounced which direction it's going. Make it simple. And like I said, use that 200 EMA or SMA, 20 EMA, SMA. Make sure that these studies, these line studies are plotted on your charts. You have to have these 202 and 20 plotted on your charts. It's a must. If I look at your chart and it doesn't have the 200 EMA or SMA or a 20 EMA or SMA on it, I'm automatically going to know that you are not following the market correctly. You should be able to call it out quickly. Prices above the 200 is bullish. That easy. Okay? So get better at that. Use these things to your advantage. Take out the guessing work. It's a long-winded answer to that question, but this is really important. You can't tell when it's going to drop or go up, but you can set points to where if it does drop below, now you can take action. If it does go above, now you can take action. You can sit back. You can wait. You can make educated decisions on trades. And that's what we're trying to do. All right. Last but not least, the third question. How many stocks should I invest in at once? And this is a question I hear a lot. And it really comes down to, one, your capital, how much money that you have, how much dry powder that you have on the sideline ready to deploy, and what your plan is. You have to have a plan in investing. As a beginner investor and trader, the first thing you should do before you invest any money in the market is to write out a plan of how you're going to accumulate value. I'm going to say that again. Write out a plan of how you plan on accumulating value in the market. Just by doing that, you're going to set yourself up for a better endeavor, a better journey in the market. You have to have a plan. So, how many stocks should you have? I would say no more than 10 as a beginner trader. Here's why. If you have $500, $1,000, $2,000, $5,000, $10,000 to invest into the market, if you are entering and buying equity shares of a company at the proper time, the goal is to buy as many as possible at a discount so that when the price returns to where it came from, your wealth, your asset value just increased by that amount. That's the name of the game. Now, if you have 10 different stocks that you're trying to buy at one time, yes, you could get good entries. But when it returns to where it was, is it going to carry the same value spread out across 10 as it would if you would have put all of that money into one? The answer is no. So in the market, it's not better to be spread out wide. It's better to build deep roots within. So for me, my first goal was to try to get all of the companies that I have on my list, 25 shares of each one of those. And what you're going to find is you can't buy them all at the same time, because we can look at these charts and you can see this thing is going up and down over a time period constantly. So you're going to get different entries on different stocks at different times. So you would be buying Palantir down here, but then at the same time, maybe Nvidia that you're eyeballing is not ready to be bought because it's closer to highs. So you got to wait, right? You need to wait for it to pull back so you can get a better price on it. But at the same time, you could be accumulating more shares of equity in another company. So this is why the plan is so important. You got to have a list and start with 2, If you're new to the investment game, you don't know where to buy, you don't know what to buy, just start with an ETF. An ETF is something that tracks like this one, the VOO. The VOO is an ETF that tracks the overall market. So this will have, just like, here, we'll go to it. I'll show you a better example than a chart, because we can always do that. Let's go to VOO, and I'll show you the companies that this tracks. Right here. So the VOO, if you're not a stock picker, you're not advanced, you don't know where to start, this is what I would recommend. Start with something like VOO, because it covers Apple, Nvidia, Microsoft, Amazon, Meta, Google, Tesla, Berkshire Hathaway, Google, and AVGO. And this is the same, it's just two different companies, Class C, Class A. But the percentage of each one of these names is right here for you, and the sector and the weight in percentage. So you don't have to be a stock picker. You could take that 500,000, 15, 2,000, 5,000 and put it all into the VOO at the right time and use this almost like a savings account, which is very smart. Average return on the VOO, if we do a year to date, 25.25%. So that's a 25% increase on your money by doing nothing but just buying the VOO at the proper time. You don't want to buy at all-time highs, remember? You want to buy like zones like this or these dips. So you may have to sit back and wait and have your cash just on the sideline until the right time. And then at the right time, start to deploy money. So don't spread yourself out too thin by trying to invest in too many companies, trying to find lightning in a bottle by just buying a lot of shares of a company that you heard was going to go to the moon. Don't do that, folks. Find quality companies that have been performing well for at least 10 years. 10 years have been performing well. Wait for the proper times on these discounted phases, close to the 200, underneath the 200, like this. Buy those equities, those shares, buy those ETFs. Sit back and watch the market make money for you. And then just rinse and repeat. It never stops. It never stops. Remember, the plan is to accumulate value over a 50-year period or longer, because this stuff can be, transferred down to your kids and to your loved ones when you're no longer here, and it can continue to grow value and increase the wealth of your family. That's the name of the game. That's why we're here. So stick to something small. Do your research. Pick 5 names. Pick 3. Start with something small. Get to a certain number in equity and then start to branch out. That's how I do it. That's my top 3 questions of the week. I hope you guys got some value out of that. Please remember, like and subscribe. Help me grow this channel. I want to thank everybody. If you made it to the end of this video and you listened to all my ranting, then, hey, you're a real one. Shout out to you. And you're the reason why I do these videos. And I appreciate you. I love y'all. Peace, love, profits. Remember, trade smart. Don't be impulsive. Take emotion out of the game. Be a winner in the market by being planned. Plan your attack. Plan your attack and attack. Let's get it. It's your boy, Train the Trader. Peace, love, profits. I'll holler at y'all next time.